Welcome to another Disruptive Discourse video. This is episode 6 of what Ark Invest bought this week. As you all know, every weekday, Ark Invest releases a list of stocks purchased and sold for their ETFs. And if you didn't know that, but you're interested in seeing that list, then check out episode 1 for how to get access to it. In this episode, I would analyze the stocks purchased in the week of November 16 to November 20, and which I haven't previously analyzed. In terms of repeat purchases, these are stocks that I've previously analyzed and which Ark Invest have purchased in the week of November 16 to November 20. I don't propose to go through this in any detail, but I'll leave those on the screen. If you wish to see them, then you can pause the video. If you'd like to see my analysis on those stocks, then feel free to check out those videos. The link will be in the description box below. Now on to the new stock purchases. Quite unusually, there were only 3 new purchases in the week of November 16 to 20, which is a very welcome relief for me, given that I've had to review 11 stocks in the past just for one video. Anyway, enough of that, let's get to it. The first of the 3 stocks is JD.com, ticker symbol NASDAQ JD. Purchased by Ark Invest on November 16 for $2.1 million. The CEO is Richard Liu. JD.com can be best described as the Amazon of China. It really is that big. JD.com is China's largest online retailer, and it is also the country's biggest internet company by revenue, and the 3rd largest by revenue in the world, only behind Amazon and Google. It has an unrivaled nationwide fulfillment network, which covers 99% of China's population and provides standard same-day and next-day delivery, which again is very similar to Amazon. It also has a B2C model, which is business to customer model, where it sells products directly to customers, and it has a B2B model, which is where it has a retail marketplace for smaller sellers to sell their products on JD.com. Again, just like how small sellers in the US sell through FBA, which is also known as Fulfilled by Amazon. JD.com also has its own dedicated web services and has a team of AI professionals to rival the likes of Microsoft's Azure, Amazon's AWS, and Google's Cloud. Overall, it's safe to say that this is one of the e-commerce behemoths of the world. Now looking at JD.com's revenue and growth, as I said earlier on, its revenue as an e-commerce company is only behind Google and Amazon. It generated a whopping $82.2 billion in revenue in 2019 and grew at a compound annual growth rate of 30% over the last 3 years. That is incredible for such a huge company. It is yet to be seen whether the antitrust action being considered by the Chinese Communist Party will be put into effect. And if it is, then as well as the BAT stocks, it may affect JD.com also. Let's watch this space and see what happens. I'm not yet invested, but I may well take a position in the future. The next stock is Tesla, ticker symbol NASDAQ TSLA. Ark Invest purchased $4.4 million worth of Tesla stocks on November 16. The CEO is Elon Musk. I finally get to do an analysis of Tesla, and I'm super pumped about this one, and it's definitely not one to be missed. So let me start off by saying that it is very interesting that Ark Invest bought more shares in Tesla at an average price of $408, give or take, on November 16. And no doubt this was later justified because already the price has gone up to $585, which is a whopping 69% increase in the share price in just a week. And of course, that is because of the news that Tesla will be included in the S&P 500. Now, there are a lot of people who are extremely skeptical about Tesla and its valuation. These are the Tesla bears, of course. Some of these bears are even predicting that the share price will drop to as low as $100. Well, as for me, I'm not going to sit here and argue about movements in share price here or there in the short term. My general philosophy on this channel has always been that a company's growth will inevitably be matched by its valuation. The faster a company grows, the higher the valuation is likely to be. That is a fundamental truth. We need not bother ourselves about exactly what that valuation will be, but we know that if it grows fast, then its valuation will be higher than what it is today. That being said, let's now take a look at Tesla. I think the significance of Tesla Battery Day was lost on a lot of people, so I've picked out the very key points of Battery Day and compiled it into a small exposition so that it can really hit home what exactly this company's ambitions are for the future. Now, whether they are able to execute is a completely different matter altogether, but it is the clarity in their path to future growth that must be applauded, and I'll explain why a little bit later. But for now, take a look at the video. I've only included a 3-minute clip from my condensed version of Battery Day, which I have linked in the description below, just in case you want to see the full 15-minute cut, and it is definitely worth a watch. But for now, here's a 3-minute clip.
And we'll see the Shanghai factory continue to scale quite a bit from where it is right now. I think we really could expect that to be, over time, a factory that produces over 1 million vehicles a year. We also introduced the lowest cost solar in the US. It's only $1.49 a watt. The value of Tesla is going to be like total, just on the vehicle side, total vehicles produced times the value of autonomy. Fundamental good of Tesla, it's like if you look back in history and say, what good did Tesla do? The good will be to what, by how many years did we accelerate sustainable energy? That's like the true metric of success. Tesla's contribution, we've delivered over 1 million electric vehicles, 26 billion electric miles driven, and many gigawatt hours of stationary batteries, 17 terawatt hours of solar generated. The 3 parts of a sustainable energy future are sustainable energy generation, storage, and electric vehicles. So we intend to play a significant role in all 3. Goal number 1 is a terawatt hour scale battery production. Tera is the new giga.
We're talking about 100x growth in batteries for electric vehicles to achieve this mission.
You basically need on the order of roughly 10 terawatt hours a year of battery production to transition the global fleet of vehicles to electric.
And the average vehicle lasts 15 years, so we're talking about 150 terawatt hours, give or take, to transition the whole all vehicles of all types to electric. And then on the grid side, 1,600 times growth from today's grid batteries to go 100% renewable on the grid, and to take all of the existing heating fossil fuel uses in homes and businesses 100% electric.
Roughly 20 to 25 terawatt hours per year, sustained for 15 to 25 years to transition the world to renewable. Giga Nevada, 150 gigawatt hours per year is like what we probably expect to make out of there. But this is really pretty small in the grand scheme of things. That's only 0.15 terawatt hours.
We would need 135 fully built out Nevada gigafactories to achieve 20 terawatt hours a year. It's not scalable enough of a solution. We need a dramatic rethink of the cell manufacturing system to scale as fast as we can and should.
Goal 2, obviously, we need to make more affordable cars. In order to do that, we've got to get the cost of batteries down.
To make the best cars in the world, we design vehicles and factories from the ground up. And now we do this for batteries as well. We have a plan to halve the cost per kilowatt hour. And it's not a plan that rests on a single innovation, some research project that'll never see the light of day. It's a plan that has taken creative engineering and industrialization across every facet of what makes a cell into a battery pack, from raw material to the finished thing.
Now, with all of that in mind, let us take a look at an extremely conservative case, and let's say that none of their goals come to fruition as set out in that 2-minute clip of Battery Day. Even with that, there are still 2 scenarios in which the future growth prospects for Tesla does not favor the bears. Let's take this in turn. The first conservative scenario is as follows. Tesla has already reached 590,000 vehicle production at the Fremont factory alone. Then add to that the 250,000 vehicles from the half-complete Giga Shanghai factory. They are also in the process of building Giga Berlin and Giga Austin. So on the basis of these tangibles that we have right now, you can say that they would make 600,000 vehicles in each factory by 2022. That means 0.6 million each in Shanghai, Berlin, Texas, and Fremont, given a total annual vehicle production of 2.4 million by 2022 at the very least. The value of Tesla's vehicle segment is the vehicle times price of autonomy. Once autonomy is fully complete and functional, that price can easily double And going by the most recent version of FSD beta released to the select few beta testers, Dojo has significantly improved, and really, it's not far from being fully autonomous. However, putting that aside, and remember, we're remaining conservative, so let's say it is only sold for $10,000, and let's say there's only 65% adoption of full self-driving. That still equates to $15 billion just for full self-driving. Now, for the vehicles, based on the above estimate, it will produce 2.4 million vehicles a year. Taking a very conservative average price of, let's say, $50,000 per vehicle, they would generate a revenue of $120 billion. Add those sales to the FSD sales, and that will give you a total revenue of $135 billion a year by 2022. Compare that to the revenue for all of Tesla in 2019, which was $24.48 billion. That equates to a compound annual growth of 76% over the next 3 years. That is only based off of just the vehicle segment. If you ask me, that, even on a conservative case, is a huge growth rate from where we are today. Then, on a conservative bull case, if the energy business, energy generation and energy storage is equally as successful as the vehicle segment, and personally I would count success as generating an equal revenue as the auto segment, which would therefore be another $135 billion, this could make it $270 billion in annual revenue by 2022 on a conservatively bullish case. Now, I don't need to speculate on an ultra bull case because anything over and above that is just pure bonus. Put it simply, this company has the potential to grow big time, and we're only at the beginning of this growth. Tesla is the one company that has a very clear path for how it proposes to scale and grow its business. If it executes perfectly and is able to generate 2 terawatt hours of battery power per year, then the growth rate becomes simply exponential. Either way, there is significant growth ahead, and so looking at that, you could argue that the stock is actually cheap at this current price. I plan to make this one of my biggest positions because I happen to think that the company is able to execute. The final stock is Silvergate Capital Corp, NYSESI. Ark Invest purchased $2.2 million worth of shares on November 17 and 18. The CEO is Alan Lane. This is a really fascinating company with a really great story behind it. This is one of those companies that really helped the whole cryptocurrency project on its way to what it has become today. Back in 2013, many of the newly formed cryptocurrency exchanges were looking for a bank where they could keep custody of their dollars, but many mainstream banks turned them down. However, Silvergate Bank embraced them and took the time to research cryptocurrency and became the bank for cryptocurrency exchanges, and that relationship has remained to date. And now they have as their clients one of the largest cryptocurrency exchanges in the world, such as Coinbase, Kraken, Bitstamp, Trust Token, Paxos, and Circle. These big exchanges, as well as other big players in the crypto space, such as hedge funds, miners, and crypto asset managers, all utilize the Silvergate exchange network, which, unlike a traditional bank, is accessible 24/7, 365 days a year. And if you've ever purchased a cryptocurrency before, you will know that you can actually purchase them at night, on the weekends, at any time, and that phenomena is attributable to Silvergate Bank. I think it is fair to say that this company has been innovative and has enabled the crypto space to really thrive. As for the company's growth, it has gone from $35.58 million to $87.45 million, which means that it has grown at a 35% compound annual growth rate over the past 3 years. This is without a doubt a great business with a huge dose of goodwill amongst its customer base in the crypto space, and that of course goes a very, very long way. As for me, I may well take up a position in this company at some point in the future. All 3 companies that I've reviewed in this video are great and impressive, but if I had to choose 2, I would go for Tesla and Silvergate Capital. Hope you've enjoyed this video. If you have, then of course do like, comment and subscribe. And also I just want to send a big thank you to all of my new subscribers. I really appreciate your patronage and it really does help the channel grow. And for those of you who are new and are yet to subscribe, then of course please do hit that subscription button and like the video so we can get this out to more people. Thank you very much and I'll see you on the next video.